hale yi demuñu school ñepp xam ne nekkul lu cool ñepp a ngi ragal a génn ñepp xam ne nekkul lu cool ibuloke no moto ni beti sola ibuloke dato ni betoto
Bengi Congo
Lamin
na
ni norin te ñamen Lamin
kabana wulo
kono ñin tay mo Lamin
pa bi lenki
muna ngata afongole
hayna
ngata ngoto le fabrama
Bengi baba nyola
no ngoto le fabrama
namu jumara kan kuma diten
fabrama
jumara mu
ndele bare muso
lunda mana
mo kata
jamani bere
alendo ko
jamani
bari ngoto man kontande
bari jamani bana na mudu wa kontan
ngoto minaka ngala min de fon filitala Lamin jibe nori nyaala
Lamin ila siran sama ne benki yala so tol sayni no ko ngol ko momo
ngoto
nam
itedinte yalo ne Lamin hakkilo diata bake karambu ngoto anu santen ministry ko di ngole si suwo ko amake ko do holi
si bitun
bagona de
ala ni ko kede namo balo
ala ni na ko na karta bulo be damna ala ni je
ngoto
nam
ngoto mon kontan fere
jamani mu ne keda
ifika Lamin ki wulo ko no nyintay mon ko do fete malo Lamin nyanta sila la be la moy kala karango
jamani karamol be sorande ne ko fasita wulo ko nako
karambo wol ma ni ko karambo wol soronda amake ko holiday lem ngoto dindi ngo nyanta sila la ala karango la moy yamen kamen fue man kontan andamande
alla min kombo courant adanda alla kombo len do la jan karamol le soranda do kamen courant ma rado la kombo e don do fana na karamol soranda karamol soranda Lamin ada lo ni no la man tara fe na sokon ala mu nekela
am Lamin ite fete malon ko le sinol de ke kar radio to
nga fine
e ko yana di mo Lamin
nga fine
ya mo na fonye
bi kabin mina kan ntambita nteri maning Fatu
ha
ntambite la sukala ala dinngol bebe siri be la moy ka
Faru dan so am fana tambira jele ni subala la ngaje dinngol be jet talanta nen kili waro e be seri jele
sa Lamin farante ku kili wo ke no la ba Lamin bi taka wulo ko no nyinta mo Lamin
aman dara fenela
ite dine ko ni man si yakari la sino la moy radio to e balon na
mo ne ka ke afo ma nyara ni alon
telentel jikot
afo ma mo be ke
ite balontel be jikritel ni man karambe ku kele yaje nata karana mbasa malaya ay tarije
par ñarande kombo courant ho findira kombo ide na raje den sonka bay ko Lamin ma nyata la wulo ko karamo be so afa nyambe
ko to wole nati bawo ngalle ni Lamin kuntala kombo courant o ka fa me kombo courant asototal wala kinay ko e sisu ko no bari ni ko e sisu ko no be karangol di ke la radio lin telel to hani tele masoto to nyaay man tele soto da bongo bar radio be bulan ko to batiri sanga ay si ay alamo
sa do kala nyaadi
ko ta o bulaji
ado kala nyaadi
kamun ke nyaadi
radio abo wala mo la be mona falaje
ibe la karandirol kala jele
ti talle be radio ko men ka karande
ile subject ro baby jele baby jele
wala nanga coco moy fa dan so wala ngombe tambi kana ngadi ngol de be ikadum bu ko de kala
ma asototal de
Lamin mala be kara wala de
bari laftalal ideal on ko inde every year second wala fourth
mona ni ko di ha ko de ko folle sinila ba ndele sinilo ne ba
mba say mba foke en koto wole fango yen wulindi yalo famo keta bat ñu fadam bulata ko ko do me yen nati jambi Lamin nyanta karana ntel beji ko be nyineka ya bulay kara wulo kana ta kilar ya bambalo yo be bulaje koto dindi ngoy si ayala le sino la moy radio
wara ka munda karamo man so Lamin nyanta kara si so na
be la sila le ayala le sino
dale ko korno ko smalo
kilar ya
mo be ngala ko momo say mi do ni ko kara
bengi bruzo
am na ko la da ba rosa no radio ba no bari woro radio ni abe jele ba ngam radio man dembe guljan dala nyara nyara woro ko fendi mo la Lamin tayra ba rosa
bara ke ku folo ajibe nori nya labi tamete
muna na de
teku
bari ko do famo ke
ja image nani nyambol si zol le ke je kisgi man si zol no le kabun ka nyoma bari nyambu kino ni manya na ka finde ni nambe ko zol la ga ni nambe ko zol la ga
ngalle limbeta de be nyambo do dilanna
nyara ni ko ridin fennat nyara nata
bari famo ke da
nata bun kono tabi bun kono nyara ngando go mele ko ke baru nganda ni pelo la ndija
iyo a ta
bun kono bismillah bisu diara
pendulala yefungo tanka sina dulu tanka koro ta koro
Hello viewers and listeners. Once again, my name is Bubaba. Today our topic of discussion is depreciation of tangible fixed assets. Depreciation of tangible fixed assets. Now let's look at the learning objective first before proceeding into the lesson. Now, the first learning objective, we will discuss definition of depreciation of fixed asset. We are going to define depreciation of fixed asset, method of depreciation, factors or elements of depreciation, causes of depreciation, reason for depreciation, how to prepare various accounts using the methods, illustration. So this is the learning objectives. This is what we are going to discuss today as our topic. Now, our topic today is depreciation of tangible fixed assets. In our previous lessons, we have discussed on tangible fixed asset. And I believe you all know what is a tangible fixed asset. When we say tangible fixed asset, we said they are assets that can be seen physically and touched. Example, plant and machinery, land and building, etc. So here, when we say depreciation of tangible fixed asset. Now, let's see what we have here. Definition of depreciation of tangible fixed asset. Depreciation is a reduction in economic value of tangible fixed asset as a result of wear and tear, passage of time, obsolescence, deflections, etc. It can also be defined as a continuous decrease in quality, quantity, and value of a tangible fixed assets. Now what they are saying here, when we say depreciation in the real accounting context, we say depreciation is the gradual reduction in the value of fixed assets. When fixed assets lose its qualities of its values, it is described as a depreciation. Now the word there, wear and tear, that is telling you the continuous use of your fixed assets. The continuous use of your fixed assets, therefore, it will lead to the loss of the value of that particular assets. Passage of time, this is the loss in the value of, that is the loss in the value of asset due to its age. Due to its age. That's talking about the lifespan of what? The assets. And obsolescence, this is talking about when an asset loses its values due to new technologies advancement, due to technology advancement, deflections, etc. So deflection is talking about the extraction of obsolescence. This is talking about when an asset loses in values due to technology changes or technology advancements, that is inventions of new technologies. And passage of time is talking about, that is the loss in the value of asset due to its age. Due to its age. And deflection is talking about the extraction of natural resources. Example, you have diamond, etc. So basically, when we say depreciation, we said it's the gradual reduction in the value of tangible fixed assets. When tangible fixed assets lose its qualities of its values, therefore you describe it as a depreciation. That's the definition. So we proceed. That is methods of charging depreciation. Method of charging depreciation. Now you have various methods of charging what? Depreciation. But basically, these are the four methods we are going to discuss. The first one, we have what? The straight line method, and we have the reducing balance method, and we have revaluation method, sum up digits method. Now let's look at the straight line method. Straight line method of calculating depreciation. When we say straight line method, we say this allows an equal amount to be charged as depreciation for each year of expected use of the assets. Each year, the asset is used in the business, therefore the depreciation needs to be charged. That is straight line method. Another name for straight line method is fixed installment method. Another name for straight line method is also known as what? Fixed installment method. This allows an equal amount to be charged as depreciation for each year of expected use of the assets. Reducing balance method, that is talking about, that is the fixed percentage of depreciation is applied to the cost of the assets. The fixed percentage of depreciation is applied to the cost of the asset for the first year. But in the subsequent year, the percentage is applied to the net book value of the asset for each beginning of the year. That is, the depreciation tends to reduce year after year. Depreciations will reduce year after year. But the second year, the depreciation rate will be charged to the net book value of the assets. For every year, the percentage must be applied to the net book value of the assets. And the depreciation tends to reduce year after year. And reducing balance method is also reducing balance method. You can also call it diminishing balance. Reducing balance method, you can also call it diminishing balance. And the other one, for straight line method and reducing balance method, that is examinable both in theory and accounting practice. Both in theory and accounting practice. That is the straight line method and the diminishing balance or the reducing balance. In WAS, when there are certain questions under this method of depreciations, that is the straight line method, and then the reducing balance method is examinable both in theory and accounting practice. When we say the theory, we are talking about the essay part, that is the theory aspects of accounting, and the accounting practice, that is talking about the calculation part. So both of these methods can be examinable in both theory and practice. Now the third one, we have our revaluation method. Revaluation method. Revaluation method. Now when we said revaluation method, under this method, the opening balance of the fixed assets is compared with the closing balance to determine the depreciation to be charged. The opening balance of the fixed asset is compared with the closing balance to determine what the depreciation of the assets. Example here, that is revaluation. Revaluation method. We say revaluation method. Under this method, when the opening balance of the fixed asset is compared with the closing balance to determine the depreciation to be charged. Example here, we have 1st of January 2000. Let's say the asset is costing here 80,000, and the closing balance, that is 31st December 2000. The currency, and here the asset is 65. This is talking about the revaluation method. Now, that is motor vehicle. Motor vehicle. Motor vehicle, the cost of the motor vehicle for 1st of January 2000. the opening balance is 80,000. And the closing balance, which is 31st December 2000, the closing balance is 65,000. Now, by looking at this here, these entries, now if you look at the asset, the cost of the assets at the beginning was 80,000, and the closing is 65. It means that the value of the assets have decreased. The value of the asset has decreased by what? From 60,000 to 65,000. You just subtract 80,000. If you want to find the depreciation of the assets, 80,000 minus 65,000. So here the depreciation for the motor vehicle will be $15,000. Will be $15,000. This is what we call revaluation method. And we have sum of digits method. Sum of digits method. Under this method of depreciation charge, reduces year after year. Under this method of depreciation, reduces year after year by a regular amount. Under this method of depreciation, reduces year after year by a regular amount. Meaning every year the cost of the asset will reduce. Every year the cost of the asset will reduce. So by looking at the graphical example presentation here, the revaluation method and the sum of digit method is examinable only in theory. Is examinable only in theory, not in practical. But the straight line method and the reducing balance method is examinable both the theory and the accounting practice. So basically these are the four methods of depreciations. So we move on. Factors to be considered in calculating depreciation, or factors to be considered in calculating annual depreciation charge. They are sometimes called elements of depreciations. They are sometimes called elements of depreciation. Factors of depreciation or elements of depreciation. Now, we have factors. Factors or elements of depreciation. So you can either call it factors or elements of depreciation. Basically, we have five factors or elements of depreciation considered when you are calculating the fixed assets. Now, the first one here we have four. The first one is the original cost. You also call it the historical cost or the cost of the assets. That is the first factor to be considered when calculating annual depreciation charge. That is the original cost. This is talking about the cost of the asset. Now let's look at what we have here. That is cost incurred, purchasing, installing and improving the value. This is talking about the cost incurred in purchasing, installing and acquiring the assets into the business. Meaning how to bring the assets into the business. You need to know the cost price of the assets. That is how much amount they have purchased the assets into the business. That is the purchasing price, installing and acquiring the assets. Then two, we have what? The estimated residual value. Or you call it what? Scrap value or residual value. Now, we said proceeds expected to be recovered after dispose. Now, when we say scrap value or residual value, this is when an amount is expected to be recovered when an asset is sold at the end of its useful life. So that is talking about now when you bought an asset into a business. So you have been using the asset for a period of, let's say, 5 years. And now you expect the asset not to maintain its qualities of its values. So it must depreciate. So you cannot sell it. Let's say you bought that particular asset, let's say 100,000. 100,000. That is the purchasing price. That is the cost price. Now use it up to 5 years. 5 years. Use it up to 5 years. Now if you have to dispose that asset, or if you have to sell that asset, at the end of the day, the part of the amount that is recovered after disposing the asset, that's what you call scrap value. Scrap value, or you call it residual value, is the amount that is expected to be recovered when the asset is sold at the end of its useful life. Is the amount that is expected to be recovered when the asset is sold at the end of its useful life. Now, in the real accounting context, if you say disposal of fixed asset, it means what? Selling of fixed assets. Selling of fixed assets. Now, the third factor, that is the estimated useful life. The estimated useful life. That is the third factor to be considered when calculating annual depreciation charge. This is talking about the number of years the fixed asset is expected to last. Let's say you operate a business and then you bought this particular asset 100,000. You bought this particular asset 100,000 and then you use these assets up to a period of 3 years in the business. So that 3 years, that is the lifespan of the asset. That is the useful life of the assets. That is the effective life of the assets. Even human beings have span and useful life. That is useful life. So human beings have useful life, and assets also, the same thing applies to assets. Assets also have what? Useful life. This is talking about the number of years the asset is expected to last. When I said asset, I'm talking about the fixed asset here is expected to last. Now 4, that is method of depreciation. The appropriate method to be used in calculating the depreciation of the fixed assets. Now here, this method of depreciation, this is talking about the appropriate method or the correct method to be used when calculating the annual depreciation charge of the asset, whether it's straight line method or reducing balance method. Whether it's straight line method or reducing balance method. So the appropriate method must be used. It must be consistent. Every year you have to use that method as a business organization. But you cannot use straight line method for this year. Next year you want to use reducing balance method. It might affect your profit at the end of the period. So the fifth one, that one, we don't have it here. That is the depreciation rate. That is the percentage that is applied to the cost of the depreciation. That is the depreciation rate. That is the fifth one. Depreciation rate. This depreciation rate is talking about the percentage that is to be applied on the cost of the asset when you are depreciating your fixed assets. So basically, these are the factors that are to be considered when calculating annual depreciation charge of what? A fixed assets. Or you can call them elements of depreciation. So let's move. We have what? Causes of depreciation. 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 What causes depreciation? So we are going to talk about that. What causes depreciation? Here we have 5 reasons that causes what? Depreciation. We have what? Wear and tears. Wear and tears. Wear. That is 1. Wear and tear. Now let's discuss on wear and tear. Now when we say wear and tear, this is where an asset depreciates due to constant usage. Due to constant usage, physical factors like erosion, dampness, rust, and decay. Now when we say wear and tear, that is talking about the constant use of your asset. When you are using your asset constantly in a business, therefore you expect it to depreciate in its values. So that is wear and tear. That is the constant use of your fixed asset. Constant use of your fixed asset will lead to its depreciations of its values. Then 2, obsolescence. Obsolescence. This is where an asset depreciates due to changes in technologies. This is where an asset depreciates due to changes in technologies. This occur, when this occur, it is due for replacement. Now, remember, the second causes of depreciation, that is the obsolescence. This is talking about the changes of technology advancement. Changes of what? Technology advancement. This causes what? Fixed asset to lose its qualities of its values. An example, the mobile 3310s. Now we are not seeing it in the market because they have depreciates in values. Now you are talking about the smartphones, the latest phones. Yeah, so that is 2. Now 3, we have passage of time. Passage of time. Passage of time, that is depreciation occurs in some assets with the evolution of time. This is talking about passage of time. That is, fixed asset lose its values due to its age. Fixed asset lose its values due to its age. Now, when fixed assets, use fixed asset for a number of years. Let's say use a motor vehicle for a period of, let's say, 20 years. For a period of 20 years. And remember that within that 20 years, that motor vehicle can no more be used because it has depreciates in its values because of the age. So it cannot be used longer. It cannot be used longer in the business. So therefore, it needs to be replaced. It needs what? Replacement in a business. So when asset lose its qualities due to its age, therefore it needs what? Replacement. It needs what? Replacement. Now, 4, we have deflection. That is, 4, that is deflection, that's the causes of depreciation. Some natural resources like gold, oil, or tin deposit become worthless when the deposits have been deflected. Now, this is talking about extraction of natural resources from the soil. Example, diamonds. When there is too much of extractions of natural resources from the soil, therefore it leads to depreciations of its values, depreciation of assets. Now, 5th, you have inadequacy. Inadequacy, this is where an asset depreciates as a result of expansion in the productive capacity of a company, or productive capacity of a company. This is where an asset depreciates as a result of expansion in the productive capacity of a company. Inadequacy, this is talking about when an existing asset cannot cope with the business. When an existing asset cannot cope with the business due to the expansion of what? The business. So therefore, the asset tends to, let's say the asset is very small. The size of the asset is very small. So if the business to expand, it grows. Therefore, the asset cannot exist in the business. It will depreciate in values. It will depreciate in values. This is when an existing asset cannot cope with the growth of the farm, the expansion of the farm. And it can cause by what? Market condition too. It can also cause by market condition. So those are the causes of depreciation. Now we move on. We have reasons for charging depreciation. Reason for charging depreciation. Now the first reason there, we have what? To help the farm to spread the cost of the assets over its useful life. It will help the farm to spread the cost of the assets over its useful life. This is talking about when an asset is purchased, let's say 150,000. So this 150,000, that is the cost. It will help to spread the cost of the assets over its useful life. Let's say if the asset is to last for, let's say, 5 years. So this 150,000 will be used within this period. Within this period. So it will help the farm to spread the cost of the assets over its useful life. The useful life there is talking about the lifespan of the assets. Now, 2, it helps to determine a fair value of assets in the balance sheet. Depreciation also helps to determine a fair value of assets in the balance sheet. Now, after calculating the depreciation of your fixed asset, now in the balance sheet, therefore, you have to subtract the depreciation from the cost of the assets. The difference there, that will give you your net book values. So the depreciation reduces the cost of the assets in the balance sheet. The difference will give you the net book values. And the third one, it helps to determine a fair profit. Depreciation helps to determine a fair profit. Depreciation, you can easily calculate your profit. You can easily calculate the profit of the assets, whether the asset is at a profit or a loss. But here, you have to calculate, it can help you to calculate the assets at its profit. Now 4, it helps to determine the realistic value of an asset at its disposal. That is, remember, when we say disposal of assets, it's talking about the selling of fixed assets. The selling of fixed assets. Now, in a business, if you have to dispose your assets, there are 2 main objectives there. The first one, you either make a profit as a business or you make a loss. You make a loss. You either make a profit or you make a loss. So it will determine the realistic value of the assets at its disposal. That is when the asset is disposed or when the asset is sold. Now the fifth one, depreciation is provided in order not to overstate profit for any year of operation in order to comply with the prudent concept. Here, depreciation also helps the business not to overstate a profit. Not to overstate a profit during the operations of every year. That is the prudent concepts. As an accountant, you are not to overstate a profit. You are not to overstate a profit in order to comply with the prudent concepts. That is, these are the reasons for charging annual depreciation. These are the reasons for charging annual depreciation. Now we move on to the next one, that is accounts prepared under depreciation. Here, there is a typing error here. It's supposed to be ACCOUNT, but here we have ACCOOUNTS. So that's a typing error. The correct spellings there is ACCOUNTS. That's the correct spellings, not ACCOOUNTS. So that is account prepared under depreciation. Now the accounts that are to be prepared under depreciation, when you are given a depreciation questions, the account that are to be prepared, the first one is fixed assets account. That is the fixed assets account. In bracket, you have what? Plan account. Plan is a fixed asset. We say these are assets that can last for a longer period of time. Now, the second one, we have provision for depreciation account. You are also to prepare provision for depreciation account. The depreciation account also need to be prepared. Then the third one, the fixed asset disposal account. The fixed asset disposal account. Now, remember, if you dispose your asset, you have to prepare a disposal account of that fixed asset in order for you to know whether the asset is making a profit or not. Whether the asset is making a profit or not. So we are going to discuss that in our lesson. And the other one is profit and loss account. That is extract. Profit and loss account. That is extract. Now balance sheet. That is, balance sheet is a financial statement that shows the financial position of a business at a particular point in time. That is extract. Illustration 1. Time is not on our side. So I am going to stop here until our next lesson. We are going to continue solving this illustration. I thank you.